committee members would line, or rather in terms of the JSE requirements. And we then have Zolisa Zwagala. Zolisa is from the Accountant General's office, where she is the Chief Director, Internal Audit Support. And Zolisa is going to be addressing the PFMA and the MFMA issues in terms of discharging our responsibilities as the audit committee. And as discussed earlier with Sakani, I don't see her here, was saying if you look at how restrictive and if you look at the stringent rules and regulations in the public sector, I still find it quite interesting that that is where we still see a number of corporate lapses. Yet that is the one environment that has got quite explicit rules that have to be followed. However, what I'd like to do now is to give the two panelists each a 10-minute to unpack their issues, after which we'll open the floor and have a discussion where you can raise certain questions to them. Thank you. Over to you, Tanya.
Good afternoon, ladies and gentlemen. I'd like to put the listing requirements and the audit committee responsibility in context. And so my starting point really, sorry, I've got an echo, does everyone else? My starting point really is from a King perspective. So from a JSE listing requirement perspective, King 3 is apply or explain. What we then did is we took certain critical requirements from King and we made those a listing requirement. So there are certain things that you have to do from a listing requirement perspective, and the others you would then apply or explain how you, and explain how you've applied it, or explain why you haven't applied that particular requirement. And one of the very critical cornerstones, and there were only really a few key issues that we pulled up, one of the very important ones was that we wanted to have an audit committee, the composition of which must be in compliance with King. In January this year, we issued a guidance letter on this matter because whilst audit committees are mandatory from a Companies Act perspective, the composition from a Companies Act perspective is slightly different from a King perspective. And particularly in the place of independence. So King is very clear that the audit committee members must be non-exec, all of them, and they must be independent. And so we issued a guidance letter reminding issuers that the composition is critical. If we don't have the composition of this committee correct, then there's not too much point at its existence. One thing that we did then also highlight is King was also very clear that it did not want the chairman of the board to be on the audit committee. And we had started having discussions with various of our companies on this particular issue where the chairman was also on the audit committee. And we received a lot of strong motivation from various companies as to how important it was in their particular instances and the value that the chairman added to the process. And so you'll see that that January guidance letter states that even though we want the composition to be 100% aligned with King, and King says the chairman shouldn't be on the audit committee, we do allow it. The provisor, as it were, being that he cannot also chair the audit committee. And we sort of highlight the fact of the safeguards that exist and where we got the comfort to allow the situation to continue, specifically that the shareholders appoint the audit committee in terms of the Companies Act, and we specifically wanted it to be highlighted. So I, as a shareholder, am approving the composition of the audit committee. Companies told me very clearly that the chairman of the board is also on the audit committee. If I'm still comfortable with that and believe that there is still going to be this independence element coming through, then we'll allow that to continue. Importantly, just to highlight from an Altex perspective, so our alternative exchange, there are two slight deviations from the normal audit committee composition, as it were. So first of all, we insist that the DA is invited, the designated advisor. He's the person who advises the company on the listing requirements. He must be invited to the audit committee. And there we weren't as strict as to the composition. The Altex model is such that there is a lower level of regulation and trying to reduce the costs and the entry. In terms of the specific responsibilities on the audit committee imposed by the listing requirements, the Act, I'm sure you're very much aware from a Companies Act perspective, is very explicit as to what you have to do. We're not regulating the Act, that's someone else's responsibility. From a King perspective, King says, this is what we think an audit committee should do, and as I've explained at the beginning, the JSE approach is that you must either apply those recommendations or explain why you're not. There might be some that are just not appropriate to your sphere of business. There are, however, two specific instances where we've given listing requirement obligations to the audit committee. The one is the financial director. We want the audit committee to confirm in the annual report that they believe that this financial director is appropriate. This is the guardian from an executive perspective of the finance function, and the audit committee should have the utmost faith in this person that they believe that they are appropriate. There are instances in a company's life where financial directors come and go, and so it would be impossible to say that a company has a financial director for its entire life. If someone resigns, you need time to appoint a replacement. And it's in these instances when the company would be engaging with us and coming with their plan and saying, look, we need 3 or 4 months to find the most appropriate person. And in those instances, we want explicit confirmation from the audit committee themselves that they believe whatever the interim step is that's taken whilst the financial director position is not fulfilled, that they believe that it's appropriate, whatever that function is, whoever's fulfilling that function. Sometimes they themselves are taking that direct responsibility. So we want that specific confirmation from them. The other instance where we impose a listing requirement on the audit committee is at the time of listing. History has shown us in certain instances where we've delved into a company and, it's been listed for, say, about 2 years, and then there's changes of accounting policies, and there's a whole thing that unravels. And when you get to the bottom of it, you find out that actually the audit committee never even met before the company listed. The advisors got together with the auditors, got together with the executive directors, and put together all these accounting policies and these judgments. And the audit committee, if we're lucky, maybe eventually met, or maybe they didn't actually meet sort of sometime down the line. And we believe that it's critical that when a company is coming to listing, that if you're invited to become an audit committee member, it's not just a case of, oh, yes, okay, I signed today and tomorrow I arrive for the function. There are responsibilities we expect to have been fulfilled before the document comes through. So very explicitly, we ask at the time of the listing that there's a sign-off from the chairman of the audit committee on behalf of the audit committee who've had a meeting, as well as a dual sign-off by the board. Remembering that the audit committee is only a committee of the board still takes some ultimate responsibility. And we're specifically focusing on the issues that we've had concerns with. So that financial information must have been considered by the audit committee. They have to have applied their minds. They must make sure that they're satisfied with the accounting policies, significant judgments and disclosures. So if there was a key issue that turns the whole way the financials look, an intangible asset, have they applied their minds? Are they comfortable that in 6 months' time, when the company has its first financial reporting period, they're not going to suddenly wake up and say, oh, actually, we don't think that was the right policy, or actually, management, we don't agree that that was a significant judgment. Those debates need to have taken place before the pre-listing statement goes out. They need to also confirm that they have received any explanations on any significant, any unusual type of transactions, and at the same time that they've considered the view of the auditor on those specific issues. We want them to confirm a consideration of materiality. How is it evaluated? Do they believe that it's appropriate? We also want them to confirm the effectiveness of the internal controls, and then to confirm to the best of their belief that they believe that the accounting policies are the ones that the company should be adopting, or will be adopting, as it were. So obviously IFRS changes, but you don't want to say 6 months later that the company puts out a different view. In terms of the final point that I wanted to mention in my small allotted time was just really the interaction with the JSE. So I've mentioned already that where there is a temporary lack of a financial director, that's in instances where we would want direct communication with the audit committee. I've indicated on listing, we'll want direct communication with the audit committee. There's one other instance where we would be engaging or directing our communication directly to the audit committee, and that would be when it comes to our proactive monitoring process. So we select the company's financial statements on a rotation basis. So once every 4 years, every company's financial statements will be reviewed by ourselves. And we'll come up with a list of questions normally of issues that need some explanation. Maybe it's a concern, maybe it's just a question. We specifically direct those letters to the audit committee chair The Act itself specifically says that the Audit Committee is responsible to deal with any concerns of an accounting matter with the financial statements. So we'll initially direct it to the Audit Committee, whether the correspondence then eventually comes back signed by the Audit Committee Chair, whether it is then directed through the Financial Director, we'll always once again communicate again to the Audit Committee because it is their responsibility from a Companies Act perspective.
Okay, thank you very much. Shall we move to Zolisa?
On. Okay, thank you. I actually have presented some slides that I'd like to go through. If we can please put them up. Thank you. Okay, briefly I'm going to run you through the legislation in the public sector, which is the PFMA and the MFMA. Briefly, the functions of the Audit Committee, what ensures Audit Committee effectiveness or not, some observations that we pick up as we interact with departments or municipalities, some of the positives, some of the negatives, and maybe touch lastly quickly on some initiatives that are on the go to capacitate and train audit committees in the public sector. In terms of the legislation, we've got the PFMA, Section 38, Section 77, and Section 76. I'm not going to run through those. I would think you are very familiar with those. And then in terms of the actual workings of an audit committee, we've got Treasury Regulation Chapter 3, dealing with or focusing on departments, Chapter 27, specifically focusing on entities. But these are some of the items that are addressed in those chapters. Shared audit committees can be formed, and how should those be formed? Appointment and termination, terms of reference, audit committees must have a charter. The chairperson of the audit committee in the public sector must not be a political office bearer, for instance, must be independent, as my colleague has just pointed out, so there's a commonality there. Composition needs to be disclosed in the annual report, and the audit committee must report in the annual report and make recommendations to the accounting officer. And if there's any issues, he needs to communicate those, or the chairperson needs to communicate those to the executive authority, the relevant treasury, and the auditor general. Excuse me. In terms of the MFMA, we've got Section 166, again, making it mandatory for every municipality and municipal entity to have an audit committee, and those are the requirements there. So just to maybe summarize the legislative part, so PFMA is Section 38 and 77, MFMA is Section 166. Other guidelines that are out there, we've got a framework from the Treasury addressing both the PFMA and the MFMA on audit committees. As you can appreciate that not everything can be lumped together whenever legislation is opened up for or is rewritten. So some things we need to issue guidance as we go along. That framework is very relevant in that regard. The PFMA space is appointed by the accounting officer. MFMA space is the council. Remuneration, you use rates that are issued by the Treasury on an annual basis, both for the PFMA and MFMA entities. Alternatively, you can use the rates that are issued by SAICA in consultation with the AG if you deem those appropriate. And any issues needs to be escalated to the executive authority, the Treasury, and the Auditor General. In terms of functions, an audit committee, as you will know, it is an independent governance structure providing oversight over those three things: internal control, risk management, and governance processes. Functions, I'm not going to run through those. I'm sure you know them. And therefore, out of scope for audit committees is operational responsibilities, and it is not a decision-making body. In the public sector, it is an advisory body making recommendations to the accounting officer or to council if you are an MFMA. Effectiveness, we look at things like independence, which in my mind is very key. Without it, there is no point for an audit committee. Composition thereof, in addition to financially literate people, we need core business specialists that will talk to the mandate of the department or the municipality. Size is very important. It mustn't be too big such that, issues, drag on forever. Understanding of the business is key for effectiveness, commitment, and due care, ongoing learning and development. I've added the final to the communication with the executive authority. This is something we do not find happening as it should, and a lot of the time it is the one thing that determines whether an audit committee is effective or not, and a proper handover at the end of the term. Okay, let me run you through some positives that we pick up as we interact with departments and entities out there. A lot of the people, as you will know, in terms of the PFMA, the majority of the members must be from outside of the public sector. If you can be in the public sector, but you will not get remunerated for the time that you spend. You may get remunerated for your SNT and so on. So I think we have a huge positive there in having people from other sectors adding value, to our audit committees as a public sector. The composition, we find, generally, we find it that to be very robust. People who take their roles very seriously and who know what needs to be asked in this meeting. The size is generally okay as well, where it is in line with best practice, at least 3 members in every audit committee, not too big as well. Understanding of business risks, a huge positive, and the robustness that does take place when we interact with these audit committees and some of the troubled departments. Actually, you'll find the audit committee has been hampering on some of these things for quite some time before that disclaimer actually came out eventually, and the support to internal audit. Some of the challenges quickly, I think, is the access to the executive authority. In my mind, that's one of the key things in the public sector. If you do not have your minister or your MEC on board, listening to your challenges, you will just keep on, singing the same song or saying the same thing over and over. So we need to work on that. With the new revised treasury regulations, we're trying to narrow that gap between the audit committee and the executive authority such that he gets reports almost after every meeting and he's able to know these things, unlike only waiting for the annual report when it comes out. Interrogation of coverage plans. I've highlighted that again as a challenge. We find some coverage plans, internal audit coverage plans, very weak in the public sector. And really, with audit committees this should not happen. Some coverage plans, some entities just continue not finishing their coverage plan year in, year out, and still it gets signed off by the audit committee. So if we could have a bit of interrogation there, that would be really helpful. And hand over at the end of the term. Some audit committees and even chairpersons just resign abruptly. There's no handover of issues. Things fall through the cracks. It is a challenge. Serving on too many audit committees. Some people serve on too many audit committees in the same, whether it's the PFMA or the MFMA, and you find, it will clash at some point. So with the new treasury regulations, we're trying to put a cap on the number of audit committees a person can serve, whether it's the PFMA cycle or the MFMA. And then relative to the organizations, attendance at meetings by accounting officers, some of them will delegate that responsibility to senior management and not attend the meetings and answer to the questions as they should. I think it is a challenge and will be very frustrating for any audit committee. Late distribution of documents for meetings. It's something that keeps happening, and we observe management instability, high turnover of key personnel. If the CFO keeps changing every year or 18 months, then there will never be stability, or you'll never see what you're doing exactly. Then commitment to implementing recommendations. Some of the initiatives that are out there, we've got the Public Sector Audit Committee Forum that Treasury is part of with a few other institutions, being SAICA, the IIA, Secretariat is currently at the IOD, so we urge you, if you are an audit committee in the public sector, to get linked to that. Last month we had 2 training sessions in the Western Cape and in Gauteng. If you can, plug into the activities there. There's guidance papers issued and commentary that's solicited from people like you. And late last year we issued Circular 65, just energizing the MFMA space there on internal audit and audit committees. And our office has been doing road shows there, really helping people. So if you want, maybe in your province or municipality would like an interaction, you could get in touch with us, maybe to talk to your council and so on. Then we've got the internal audit framework from Treasury. It's currently under revision as well. We want to build in a lot of the best practices out there. The last version was issued in 2009. And then the regulations, I've spoken to those earlier. We are currently also compiling a handbook which we'll post on our website. And then the other support from the Office of the Accountant General is the inductions that we do when departments ask us, the interviews we conduct. We help departments conduct interviews or even shortlist, based on our experience on what the skills that are necessary should be. And then we resolve queries. We get a lot of queries, be it from internal audit or audit committees, conflict of interest. Should I do this? Should I continue as an AC member or so on? So we respond to those and we will try to help you. And then the provinces run AC forums from time to time, if you can plug into those. And that will be the end of our talk. Thank you.
Okay. Thank you, Zolisa. I guess, one of the things I opened with is the indication of how stringent the regulatory environment is in the public sector, PFMA, the Treasury regulations, which have got added responsibilities to the accounting authority, be it you must do your bank recons weekly, especially for some of the schedule companies. You cannot pay your suppliers beyond 30 days, and even the collection of debtors. However, with all of this, how is National Treasury looking at increasing the accountability? Because despite this framework, there are lapses and nothing really happens. We just see it in the reports. Is there any improved accountability that is expected to take place?
Maybe in that respect, I would again maybe hop on the escalation clause that we have. When these things happen and the audit committees, are closer to the entities more than Treasury can be, and they play a role there. So, if we look at the 3rd chapter of the regulations, very few audit committees still escalate any issues really to the Treasury or to the AG or to the Executive Authority. So I think a lot of them just sit and just continue doing their same job. They've been doing the same way. So I think escalating and really using the avenues that are available to you, it will help. I think those 3 bodies, being the AG, being the Treasury, being your Executive Authority, should be able to step in, at some point and make sure that your voice gets heard.
Sure. Tanya, on your side as well, before I open to the audience, when you look at the requirement, one of the roles of the Audit Committee, I think it's para 3.84 on the review of the competences of the financial director. Is it one of the unintended consequences, I'll say, is the fact that in some audit committees, and I'm not sure, how you've viewed it and if you are aware, you find that the CEO ends up not playing a key role in an audit committee, even sometimes not even attending audit committees. Do you see that as an unintended consequence, that the focus is more on the FD? As a result, the CEO doesn't find it necessary to always be there and understand the issues that are being deliberated on?
I can't speak from experience because we don't attend the audit committees. Our focus on the financial director role was a direct request that came many years ago, that we were focusing on trying to beef up the auditors and placing a lot of responsibility on them, yet many companies did not even have a member of the board who had financial capacity. So it was from that environment that we were trying to make sure that there was fiduciary responsibility on the board, someone who had the financial expertise. As I say, we don't ask audit committees to report back to us in terms of their actual day-to-day working. So whether a CEO has been sidelined or not, I can't comment on that.